Yeah.
Hi, everybody, and welcome. It's Brian Pate back talking about the pulse of real estate. And today we've got one of my good friends. This is Scott Walton. Scott is a mortgage lender here in town. Scott, why don't you tell us a little bit about yourself? Who are you with, and how can
Yeah.
people contact you if we want to catch up with you?
Yeah. Well, thanks for having me on. Scott Walton with Novus Home Lending. Background, I've been in the real estate lending for over 20 years. Made the switch to full-time lending in 2017 and been in the market, and it's been a little weird the last couple of years, but it's still enjoyable.
Absolutely, absolutely. So let's start out with talking about, one of my favorite conversations that we ever had was at an event that we did together. I think it was
Yeah.
back in July or August. We were
Yeah.
talking about when the Fed was going to make a cut. I
Yeah.
bet my money on a 1/4%. You bet yours on a 50% drop. And lo and behold, Scott was right. Shocker, the mortgage lender was right and the real estate agent was wrong. I know that
Yeah.
never happened before.
Ever.
So with that, everybody remembers that in September, the Fed lowered the rate. And we
Correct.
saw about 2 weeks in advance of that were where the actual lowest rates were. We were seeing occasionally
Correct.
we'd see as low as 5.75, 5.9,
Hmm.
and things like that coming to the table without any points. But since then, the mortgage rate has skyrocketed. Can you talk a little bit about
Yeah.
why? And because I know I love talking to you because you get into the minutia and the detail like I do with my
Yeah.
stats. So I know you know your stuff. Tell us what's going on and why are we seeing rates now? 7.25 is a good rate today,
Yeah.
in many cases. So why are we seeing that?
Yeah, I mean, we're back up to what it was back in July. I think the best place to start is what is the Fed rate, and kind of go into detail with that. So the Fed rate is basically a 24-hour rate that banks charge each other to borrow money. It is the foundation of a lot of the short-term rates like credit cards, auto loans, home equity line of credits, that type of stuff. The Fed rate doesn't directly affect mortgage rate. It indirectly affects it by what's going on in the economy and that type of stuff. So I think that's the biggest thing that needs to be said, is that they're not 100% correlated. Usually when you see the Fed rates drop, the mortgage rates do drop. But the mortgage rates are more tied to what's happening in the market, specifically the bond market. And the bond market likes to try to get ahead of what's happening in the overall economy, what the Feds are doing, all that good stuff. So I don't want to go into too much of the technical because it gets pretty boring, but the what has happened since the Fed has cut their rate is that data has came out that hasn't been as favorable as what they were seeing prior to the Fed cut rates. Um, so we had the jobs report beginning of this month, and ever since then, it has kind of gone up as far as mortgage rates are concerned.
Right. Gotcha. And are you talking about now, are you talking about the 10-year bond rate? Is that
Yeah,
the
the
one you're
10
talking
year,
about?
and you can kind of, that's the main one, but the 2 year and the other bonds also influence what happens in the overall market. But the 10 years, the main focal point when it comes to mortgage rates.
Gotcha, gotcha. So our low nationally this year in 2024 has been about 6.11%
Mhm.
from a national standpoint. The high was up around 7.75, maybe 7 7/8 even. Are we going to get there before the end of the year, or is it
And
depends? Does the
are you talking
election
about the high
play?
or the low?
Either, because it right now there are, I'm hearing agents in some circles saying I got to prepare for 8% rates. And I there's truly a fear there.
Correct.
I don't personally see that, but I don't know enough about it to really go beyond what I read. So what
Yeah.
should we be watching? What would be the expectations here
So
in the next few months?
obviously, I don't have a crystal ball, but the kind of the main focus, today we had the PCE data came out. It wasn't awful, but it wasn't good. It was kind of in line with expectations. The big thing that comes out tomorrow is the BLS jobs report, and that's kind of what everybody's waiting on to see how the job market is doing, because that's kind of the last domino to fall to kind of help spur the market, specifically the the bond market to kind of drop, because right now everybody's just buying bonds, and it's causing the bond market to go back up. So specifically what to look for, I I don't know the answer to that. There's a lot of variables coming into the next couple weeks, actually another week left with the BLS jobs report. We have the elections, we have the Fed meeting next week. So there's a lot that's going to happen in the next 7 to 10 days that could influence the rates. I still believe rates are coming down. I don't think they're going to skyrocket. I didn't think we'd be back up into where we are right now either. So there's just a lot of unknowns right now, but I don't think we'll get back up into eights.
Gotcha. Do you think the presidential election will have anything to do with the with rates here in the next 30 days in the short term, or do you think people get beyond that when it comes to a long-term investment and what for most people is the single largest investment they ever make in their lives?
Yeah, I think there is some play into it. I don't know all the technicals that go into it, but depending on which um, candidate is elected determines kind of how the short term of the bond market's going to play out. Um, I don't know all the technicals in there, but I do know that one of them is going to be more favorable than the other. So I do think there'll be a small play into that, but long term, the the Fed chair Jerome has the most power with what's going to happen with the overall Fed rate and the kind of the economy.
So let's talk about Jerome Powell for a minute because he's been in that
Yeah.
position here for a while. That's is that a position that depend let's say that I know that he's been serving under I think he served under the end of the Trump era
Hmm.
when Janet Yellen went to the cabinet, and then
Correct.
he served through the Biden administration. Is that a change that could potentially, you're hearing the Trump campaign talk about significant changes in
Hmm.
in monetary policy? Is that possibly a change that you
I
could see
do.
being
I think
made?
so. I
You
do
think
think it'll
so?
be, but I don't know the intricacies of like what kind of term he's on, if he's on any type of term he has to wind down with. I'm not 100% positive on that stuff. I try to stay less political.
Try to stay clear of the political stuff. Understood. And that's
Yes,
fair. That's
yes.
fair. So what do you think? Here we are. We're a week from November 7th, which is the next
Mhm.
Fed meeting. You're a god in my book now. You got the last one right. You want to take a shot at the next one?
This one's going to be a little bit more difficult. Beginning of October, I thought there'll be another 50% basis cut, but I'm leaning more to a 1/4%.
Okay.
I think they'll do a 1/4% this next meeting and then one in December.
So you're thinking one in December also in addition.
Yeah, the last Fed meeting was a big one because it all the Fed members did a what's called a dot plot map where they kind of predicted or estimated where the Fed fund rate would be.
Hmm.
The majority was the path of that, a 50% base or 50 basis point cut and a quarter, and then a full point throughout the next year.
Okay, so if we go into 2025, not only are you seeing, so we've seen a half for
Mhm.
just to recap everything. We saw the half in September. You're talking about a quarter in November and a quarter in December. So that's a full point when you put those together in a
Right,
4 month period. And so you're talking about four more 1/4% over 2025, basically,
right,
which basically means 2% over 12 to 14 months,
correct.
basically. Okay.
Yeah.
And so I know that with inventory data here, at least in the triangle market,
Hmm.
we've seen inventory increase by 35% in the last 6 months.
Hmm.
We've seen pending listings go actually downward. What are you seeing activity wise right now? Because there's a lot of agents today. Today's Halloween, so there's some really scary stuff happening right now.
Yeah.
There are agents freaking out because their listings haven't shown.
Yeah.
How much buyer side activity, or what are we seeing in terms of mortgage applications and things like that? He's looking up his data, I can
Uh,
tell.
Sorry. No, no, I had my internet kind of went slow there for a second. You were
You're
kind of
good.
freezing. Can you hear me okay now?
Yeah, you're good.
Yeah.
Go ahead.
Can you please that last little part of the question is when we kind of froze.
Yeah, so I was talking about the fact that showings are really down. The
Yeah.
activity level for listing agents is
Yeah.
way down. Buyer agents are showing 15 to 20 houses instead of 4 to 5 these days because
Yeah.
there's just more to choose from. What is the mortgage activity and that mortgage application
Yeah.
data telling you right now with in terms of the marketplace?
Yeah, so we track a lot of things on our what's called a credit pull when somebody fills out an application and they do a credit pull. Our credit pulls have slowly been increasing the last like 3 or 4 weeks. It's going to be interesting to see what is going to happen with the news that just came out and next week, what happens to those credit pulls. But as of right now, it's been kind of steady. Um, Not as busy as we were or as busy as we think we should be. But the activity is still there. There's still people out there buying and shopping. The things that I am seeing is buyers are buying houses on the houses that are listed correctly as far as price and condition are met. Um, but it's just there's not a lot of buyers. There's just not a lot of people in the whole um, buying part of it to where there's not a mass amount of buyers for
Right.
everybody to kind of choose from. So
Yeah, it's very interesting from our end because the median sale price for closed properties in the 16 county triangle area in July was 426 and
mhm.
last month it was 410. So that's a
Yeah,
$15,000 decrease. These people that are saying, "Well, I'm waiting on interest rates to go down." Well, you just missed your opportunity because you could have if you'd have gone under contract in September, not only would you have gone down 15,000 in median sale price, but you also would have been able to get that best rate.
yeah.
Um, and so there are some people that are missing opportunities because they're not doing things and going
On
ahead and making
that
a move.
on that data, are you seeing different price points being listed?
Yeah, the busiest price point here in the triangle market is between 500 and 800,000 and then again
Mhm.
over 1.5 million. The ultra high end market is
Yeah,
very
hasn't.
active right now.
Yeah.
And it's also a lot of cash buyers,
Okay.
a lot of second home buyers, to be quite honest with you, people from California
Yeah.
and New York and New Jersey that are buying second homes down here in the triangle just because it's so gorgeous, as we
Yeah.
all know. You know, we've got a great advantage. We're 2 hours from the beach, 2 hours from the mountains, 4 hours
Yep.
from DC, 6 hours from Atlanta, and I can be in Florida in a 1 day drive rather than a 2 day drive or swapping off while you're driving from New York. So I
Yeah.
think there's still a market for us locally,
Yes, I
but
agree.
nationally, it's still the numbers are showing us down 1.5%, 1.75%, on average across the country. But then you look at that if you look at the long-term data, I was just looking at some 40-year data from 1984 to 2024. Parts of North Carolina have gone up over 785% in value
Yeah,
in
it's
40
crazy.
years. So there's still value in the homeownership. It's not a tangible dollar because it's not a liquid asset,
Correct.
but it at least gives you that leverage to be able to go, well, I'll give you a prime example. We've got a mold issue in our house that we're going to have to get taken care of. But because of what prices have done, we've got almost $300,000 in equity right now that we can go tap 50 grand and get everything taken care of.
Correct.
And it's not really a concern. We can spread that out over 10 years and
Yep.
be able to make that easier. So let's talk a little bit about some of the programs that you're seeing. What are when people are getting a loan right now? What are you seeing? Are you seeing 10% down normally, 20% down? Are we seeing 80% LTV? What are you? Are we seeing FHA at all? Are
Yeah.
we seeing VA at all? In a
Yeah.
very what we lost in a very competitive market in 2020 and 21. What's the current status?
Yeah, so I'm seeing kind of a range. It depends on the price point, but a lot of 20% down. On the first time home buyers, we are doing a lot of FHA. We're doing actually quite a bit of USDA again.
Ah,
VA obviously is still there. But as far as your traditional buyer, it kind of ranges from to 5 to 20. I've seen some with 40% down. It depends on what they're coming from. But those first time home buyers, I'm seeing a lot of help from family members pulling money out of wherever to help their family members get into a house. A lot of people are tapping into their retirement accounts or 401ks, that type of stuff to get into a house. But on average, I would probably say we're under 20% as far as down payment is concerned.
Okay.
Um, there are a lot of tools available. If somebody has a cash flow um, hurdle that they're trying to get over with the monthly payment, there's the 2-1 buy downs. We have special programs in certain demographic areas where there's interest rate reduction or closing cost help that we can get them into. So there's a lot of stuff that's available to help break that barrier to make it easier with either cash to close or monthly payment.
Gotcha. Okay. So you mentioned closing costs. So let's transition this and go to our realtor friends who are still freaking out over the NAR settlement and how to
Yeah,
pay for compensation, everything.
yeah,
It's funny. We've said the same thing for 4 months now, getting ready for this, and there's still people that are making it much more complicated than it needs to be. So I'm
yeah.
going to ask you, Scott, if I'm a buyer's agent and I
Mhm,
simply put a $15,000 concession for, and obviously in North Carolina, I can't mention that it's buyer's agent compensation, but it is a
mhm,
concession where the seller is paying buyer expenses. And
mhm.
so we put that $15,000 in there. I let you know both verbally and with a copy of my buyer's agency agreement that that's the buyer's compensation. That number, from what I understand, correct me if I'm wrong, is not counting against the maximum closing cost. Like on an FHA loan, we know the max is generally 6%. So
Right.
it's in this case, it's 6% plus that buyer's agent compensation. Is that the case?
Most of the time, yes, but I would definitely have a conversation depending on the loan program. It could throw a wrench in things. So
Got it.
um, that's a question that obviously everybody has, but it's more of a, I would say, a case by case basis that you need to have a conversation with your lender on to make sure that it fits within the guidelines of the loan program that buyer is going for.
Gotcha. Very good. So I'm gonna turn it over to you. What have I not asked you about that we need to be talking about? What should I, as a real estate agent, know that you need me to know to make your job easier so I can make the process better for you?
No, we kind of covered a lot already. I think the rate is always going to be, it has been for the last, 24 months, the biggest kind of talking point. Um, I guess I have a question for you. Is the rate the single most important thing that buyers are talking to you about?
No, it's people are buying houses the same way they buy a car these days. What's my payment?
Yeah. Okay.
And it's not, I've always in my wealth growing classes and my coaching programs that I do, I tell people, don't buy on the rate or the payment. Simply ask, what's the cost?
Right.
If you, and it's one thing to be able to pay cash for a car and to be able to get a 2% rate or a 1.95 that we're seeing a lot of these days, especially on new cars. If I've got $50,000 that I can buy a car with, and by the way, don't go out and buy a $100,000 SUV. You go out and buy a Toyota Camry or something like that for $40,000. If you don't want to pay cash for it and you want to keep that asset there, you just put that cash into a money market account, let it grow, safely, and
Yeah.
3 to 4% a year. That 3 to 4% a year is outpacing your 1.75 or 2% a year that the car dealership is calling, and you're getting a write off for that if
Yeah.
you're doing it that way. So there's multiple ways to do that. Some people just rather write the $40,000 check, have the car paid for, drive it till the wheels fall off, write it off for my mileage and things like that, and take the standard deductions with it.
Right.
People are doing the exact same thing with houses these days.
Yep.
I like you. I think the bank of mom and dad is the most popular bank in the world right now.
Yep.
I think we've got an entire generation. My kids are all between 20 and 25. We've got a son that's living at home right now, trying to save up in order to buy his first house, and we're encouraging that.
Yeah.
We know in this house, my wife being at Edward Jones and me being a real estate agent and instructor, we know the value of getting into that home early in your life and being able to get that 785% run up we were talking about earlier
Correct.
in home values and what it allows you to do down the road. I think there are a lot of Gen Zers that have been beaten up and have very little hope. These are the kids that graduated from high school or college in the middle of COVID. and they lost a couple of years of interactivity and learning and got sidetracked with what their career plans were, what their general plans were, and now they're recovering. I think we're
Correct.
finally getting back to some normalcy after the pandemic. But I
Yeah.
think that that's a generation that 20-year-old to probably 28-year-old right now that would have been either in high school or in college during the pandemic. Maybe they were working on a master's degree, something like that. I think we're seeing a lot of folks coming out with so much school debt that
Mhm.
they can't afford, that is a revolving debt that that dings them against their credit and their qualifying ratios. So I think
Right.
that's something that we're going to have to look at. Is forgiving debt the answer? I don't know. I think if you took out the loan to take the classes and then didn't reap the benefits of it,
Yeah.
that's a you problem. So,
Correct.
and I think that's kind of what we're looking at in the housing business. People are scared to take a bite of, okay, I can qualify to buy a $500,000 house, but that means I'm paying $100,000 cash out of my assets, and I'm financing $400,000, and at 7%, that 400,000 is about a $2,900 to $3,200 P&I. Then by the time you get the principal or the taxes and insurance added on, it's $3,500 a month. Now I got $4,000 a month coming out of my pocket on a house, or I can rent something and wait on the rates to go down. Maybe I get lucky and there's a crash, but it's no different than investing. If you don't invest a little bit at a time
Right.
consistently, you're not going
Yep.
to catch the ups. You're going to catch the downs. If you're like me, if I want to lose last night on the Yankees and Dodgers, man, game 5, I'm sitting here, I'm going, yes, tonight's the night for the Yankees. I know they're going to win it. I put 10 bucks on it. Sure as crap. 20 minutes after I do that, the Dodgers score 5 runs. It just never fails. Some
Yep.
people don't have that good of luck. But it's definitely, people laugh at me because I always tell people it's a good time to buy. And the reason is it's better to buy now than to wait for 2 years and try to anticipate, time the market that you don't control. And that's where I think a lot of people make the mistake.
Yeah, I think all of that, there's a lot of education that still needs to happen in our industry on both sides of it. Um, there's a lot of there's a lot of different variables inside of a home purchase, and you touched on it a little bit with cost. A big thing that I talk to people about is rate is only half of the picture. What
Mhm.
you're ch- paying to get to that rate is the other half. There's so much cost involved with getting a rate. You see them online, you get a 5.5% rate, but it's a cost you 3 points, and to get there, it doesn't make any sense when you're most likely going to sell or refinance with 4 to 7 years. So there's a lot of education inside of our stuff with cost, monthly payment, what's going to happen in the future, all that good stuff. So yeah, that's to summarize what you were
Yeah, I
going on
think I
about.
think we're on the same page with that one. So, any parting remarks before we call it a day, man?
Well, what are you dressing up as tonight?
Uh, well, that's why the beard's growing out a bit. My wife and I are dressing as Rip and Beth from Yellowstone.
Oh,
People that know me, my son laughs at me. He says, "Are you watching Yellowstone again?" I don't know why. I'm just addicted to that show.
it's
It's
such a
all
good
about
show.
it's all about real estate for me. So, and
Right.
that show is the epitome of holding on to my land. So,
There's another one that's coming out regarding oil, that's made by the same guy. I saw that looks really good.
yeah,
So
that most definitely. I'm all in with anything that Taylor Sheridan's doing
yeah,
at this point.
yeah.
I think he's one of my people.
Yeah. No, last little remarks. We're in a weird time. It just hang on, just keep doing the activities. Keep working with your sphere, your close people that you do business with. And it's gonna be fine no matter what you hear in the news. We're gonna get through it.
Awesome. Scott, give us that phone number again if we want to reach you to get some information on a loan.
Yeah, 919-530-9977. And email address is swalton@Novus Home Mortgage.
Scott Walton from Novus. Buddy, thank you so much for your time. I
Yeah, thanks for
appreciate you
having me
taking
on.
time out of your busy schedule for me today and for our viewers.
Yeah.
We'll look forward to catching up. We'll set up a meeting and we'll do this again in January and we'll see how we did on our predictions.
Yeah, yeah, let me know.
There you
All right,
go.
buddy.
Thanks, buddy.
Thanks.